G'day everyone. I was always taught to be just a couple of minutes early all the time, so I'm just hanging around waiting for 12 o'clock. And of course, I will wait before we kick off to 12 o'clock. Let's just get everyone who is currently here into the room so we can all say g'day and maybe just test some of the technical aspects such as the microphone and whether I can hear you guys. If I ask for any questions, that sort of stuff. So always, why don't we just start off by getting you guys to type into your chat panel what color shirt that I'm wearing. So if you can see me and you can hear me, then just tell me what color shirt am I wearing. That would be great. Enter your answers now. Great. Blue, yes, awesome shirt. Do you button up, Scott? No, I kind of like the casual look here. How much coffee have I had this morning? I only had 1 cup of coffee. I'm just excited to talk to you guys about bookkeeping and high on life in general. And maybe I've been watching too much Tony Robbins. Is there too much Tony Robbins? I don't think there is. Anyway, really looking forward to today's webinar. Lovely to see you, Karen. Lovely to see you, Roger. Thank you, Mike. Yep, got you there. Blue shirt. Yeah, well done. Yep, thank you very much. I'm not really comfortable with saying who my stylist is at this point in time, but thank you very much for asking, George. Right, got a few people from the US have attended. That's great. I know it's sort of getting late in the afternoon for you guys, early evening. Really appreciate you coming on board. Right, we've got a couple more people joining us as we speak, and we're just 30 seconds away from starting off on the webinar. So just pause for one moment. I'll keep talking, of course. Yep, yeah, please put all your questions in that chat room. If you can raise your hand in the panel if you've got any questions, and I'll circle back to them. Now, in the control room today, I've got Juby and Kerry. Jube is my personal assistant, and she's based in Cebu, and she's part of my Outsource team. G'day, Jubes, thanks very much. And Kerry is my practice administration here for my accounting firm, which is called Scott Partners here in Melbourne, Australia. So you can be assured that we do know what we're talking about when it comes to accounting and finance. Been running this firm, but I'll explain all of that in 1 minute. But first of all, we've just got to wait. Be polite until 12 o'clock. All right, it's kicked up to 12 o'clock. Let's kick this webinar and welcome everyone from all around the world to our webinar, which is the Go Global Better Bookkeeping for Smarter Growth. The 12 things that you should be absolutely aware of when you are outsourcing your accounting function from your business. And I really appreciate you coming to our webinar today to hear all about those 12 essential tools. Now, my name is Scott Trevorth, and I'm the Managing Director of Go Global Bookkeeping Australia Proprietary Limited. We are a bookkeeping company that also provides fully qualified, fully supervised accountants to do your book work, your bookkeeping, and also your internal accounting. So any sort of internal financial functions that you need done. These guys will do it at an absolute fraction of the cost that you could get in here in Australia or even in the US and other countries as well. So low-cost labour environments. We'll explain all of that in the webinar. Why am I getting ahead of myself? I don't know. I'm also the managing director of a chartered accounting firm called Scott Partners. So, and I've been the managing partner of Scott Partners for some 12 years now. That business has been in existence for about 45 years, something around about 45 years. This accounting firm's been in existence, and we've got all sorts of small business, large business clients, as well as individuals and property people. But come here to hear about our accounting firm. You came here to hear about outsourcing. So without any further ado, I'll flip you over to the slideshow so you don't have to see my mug anymore. Once again, I just want to thank those people in the control booth. And if you've got any questions, please don't hesitate to put your hand up. So without further ado, let's flip to the presentation. Okay, I've done that extraordinarily badly, so I'll try again this time with a little bit more feeling. Now, I'm really sorry if you are after I'll turn that off so you don't for your bandwidth. I'm really sorry if you're after a boring bookkeeping or accounting type of presentation, because that's just not what I do. So I'm up to all exciting, high energy. This is our webinar, very first webinar for Go Global on the bookkeeping side of things. We've done plenty of webinars for various different issues on the accounting and tax side of things. This is a really exciting, the Go Global bookkeeping webinar. So anyway, let's kick right off onto that. Oh, see the little logo, the little books, lovely. Okay, excuse me. So the title of this one is called The 12 Steps to Successfully Outsource Your Accounting. And don't worry, we're going to go through all of those 12 steps. We're going to go through all 11 of those 12 steps. I'll explain that a little bit later. And it's all about outsourcing your accounting. Now I'll explain what outsourcing means and what accounting means. So we'll just assume that you don't have any knowledge and kick on from there. So welcome to the webinar today. We'll run for around about 40 minutes. I'll have plenty of time for questions at the end. And of course, there's the obligatory offer. So don't worry, you're going to get some value, plenty of value out of just spending the next half an hour, 40 minutes with us today. All right. So, of course, outsourcing is all about an empty boardroom. No, it's not. What we really need to do is start off defining what it is that we're talking about. So let's kick into that straight away. Outsourcing is just the process of obtaining a good or service by contract from an outside supplier, i.e. that's not someone from in your business. So you don't outsource your coffee to your coffee lady or to your secretary, even though it might feel like that sometimes. That would be insourcing. Outsourcing is where you get someone else, like your cleaning contractors possibly, to come in. You say, clean my office every week. They come in and they clean your office and then they leave and you just pay them as an outside supplier. So that is outsourcing your cleaning. That's what that means. Well, what is accounting then? Okay, accounting in its broadest and simplest definition is just the process or the work of keeping financial accounts. Now, it's the second or probably the oldest profession on earth, only in that, well, maybe it's the second oldest because the first oldest needed to have some sort of accounting done for it in order to, one, make sure that the tax man got his cut, make sure that the money lenders got their cut, make sure that the owners knew how much money that they were making, whatever that initial enterprise was. So accounting is very, very important for that. Okay, you probably already outsourced your taxation work. That is, unless you're an accountant like us, you probably get an accountant to do your tax work. I mean, sometimes you might do your business activity statements inside your office. And for those people that are joining us from a country other than Australia, that's just something that we need to do on either on a monthly or quarterly basis to tell the taxman how much money they should be charging us. So, but you probably already outsourced that sort of work because not many businesses keep an in-house tax department on their team. So what is it that we're talking about if you've already outsourced your taxation work? Well, we're talking about bookkeeping services. That's right. And the typical type of bookkeeping services that gets outsourced to businesses. Okay, let's just quickly roll through them. So bank reconciliations, and this is just the process of making sure that the numbers on your bank statement, if you've got a little piece of paper in front of you, or for most of us who use electronic banking, all of those transactions that you can see on your electronic banking and the actual balance that you go when you go to the ATM to withdraw some money, that ties into your accounting records, because how important is that? It's absolutely vital. So the bank reconciliation makes sure that you've got all your transactions that have gone through your bank account, and that is the single source of truth for your business. That is your bank account, what goes through there. Everything else is just talk. What actually cash coming into your business and cash going out of your business all goes through your bank account, and the reconciliation of that, or that is the process of making sure that your accounting records agree with that bank records, is called the bank reconciliation. Very, very important. Could be really time consuming. Back in the 90s, I used to work for a tobacco company, and we had 3, maybe 4 people working on a bank reconciliation. That's how complicated it was. Nowadays, with technology, cloud accounting, other things, it can be a couple of clicks of buttons and you're done. So that's the exciting news for internal accounting. Anyway, let's go on. Accounts payable entries and payments. So these are your suppliers that you pay them. So they send you invoices. Most often nowadays, they send them via electronic format, so you get it digitally. But if you're still waiting for the Australia Post to deliver your statements and invoices, they'll come to you. It's a process of entering them into your accounting system. or matching them to what other purchases that you've got, and making those payments. So making sure that you pay them either on a batch or on as you go. I'll explain that in a little bit more detail a little bit later. Invoicing and customer setup. Well, this is the most exciting thing. So, of course, invoicing is the process of billing your customers or your clients and making sure that you get paid. The customer setup process is just when you're bringing on a new client or a new customer to make sure that you've got all their records, so you can either market to them or make sure that if you're giving them terms, so that is that they don't have to pay you up front, that you know how to get the money. Speaking of which, debt collection is our next bookkeeping type of service. And that's when you just call your customers or your clients and or email them or send them a letter or whatever process you're using to follow up to make sure that they pay within your payment terms. Because remember, cash is absolutely king. And you don't want to let your customers and your clients keep your cash for you for their own benefit. You want to make sure that you get paid, and typical bookkeeping services make sure that you do get paid. And then when you do get paid, it's also make sure that the payment is recorded correctly in your accounting records. Payroll, employee management. Oh my gosh, if we had to do everything ourselves, where would we be? As we speak, I'm doing this webinar and my team are outside of my office right here and they are working diligently for me. They wouldn't do that if I didn't pay them. And they wouldn't do that if I didn't make sure that they were developing as team members. So in payroll and employee management, all about making sure that we've got their correct details, the correct bank accounts, and we're paying them the correct amount. So it can be quite involved and often outsourced to people like ADP, or they can just be insourced through your own payroll department within your business, or you can outsource them as part of a bookkeeping service as well. Fixed assets, what on earth are these? They're not things that you can pick up. Yes, they could be. Fixed assets are just assets or things that you buy that you use within your business that are going to last you more than 12 months. So it could be a microphone stand that I'm looking at right now. That's probably going to last me, looking at the quality of this, probably about 2 or 3 years if I don't hang off it like I sometimes do. So it is a fixed asset. It only cost me a couple of $100, but I'm going to make sure that I've got that microphone stand recorded on my books. That'll form part of my balance sheet. We don't need to worry about what that is, but the process of identifying, recording, and making sure that we correctly write the cost of those off for taxation and accounting purposes is all part of the fixed asset process, and that's part of the typical bookkeeping service as well. And of course, we've got inventory management. So if you're in a type of business that carries stock, that you buy goods and services, or you make goods and services in order to sell them to other people down the track, then that's called inventory management. It could be work in progress management. It could be a whole bunch of different things. And that's sometimes really hard. It might be involved physical stock takes, or it might involve lots of stock adjustments, or that can be quite complex, or it can be quite simple depending upon your business. But again, it's a typical bookkeeping service. So hopefully you know a little bit about what bookkeeping services are. Now, the other thing that we're talking about when we're talking about outsourcing or accounting services, not necessarily outsourcing, is what's known as an internal management accounting service. So and these are the typical type of things that I'm talking about with internal management accounting services. So these are the guys that will give you, guys or girls, absolutely sexist of me, I apologize, monthly or quarterly management accounting. Now, what on earth is that? Okay, that just means that you've decided that I want to see certain numbers presented to me in a certain way. Now, it might be a profit and loss on a balance sheet, it might be a cash flow report, it might be a key customer report, but whatever it is, you want to see that information on a monthly basis or a quarterly basis. Your internal accounting function will make sure that you get that information in the format that you can use it. So it needs to be timely, it needs to be accurate, and it needs to be presented so that you can actually use the thing quickly and easily. Key performance indicator preparation and presentation. Now, again, sometimes your salespeople could be involved in this, sometimes production, sometimes your inventory controllers, whatever, but it can be part of the internal accounting services to work out what the key drivers of your business are. So the key things, whether it's how many widgets that I've sold today, how many hours the machine was working for, how many sick days my people had, these could be all indicators of how your company or how your business is actually performing in any one time. And those are called key performance indicators, and preparing them and presenting them to management could be part of or typically is part of internal such management accounting services. Now, these guys also do data entry. What the heck? In today's day and entry, yes, sometimes there's a need to enter a lot of data, and it can be, sometimes it's technical data. So whether it's a supplier invoice, that could be an example of some technical data, because you've got information that can't easily be read by computers, or it might be around invoicing, or it might be around how many parts were used on this particular job, and that's just a data entry type of role. Project work is really important, because project work really comes from being able to look at what specific task management might have for you. So it might be, should I buy a new machine? Should I move my factory to somewhere else? Should we buy a new computer system? Now, these are the sort of projects that you need technical bodies to work on, and these internal accountants can work on that sort of project work. Cash flow management is so vital. Everyone must agree to that, because if you don't run out of cash, you run out of a business. No one will work for you if you don't pay them on time. I mean, how reasonable is that? So cash flow management is absolutely vital, and knowing when you'll have some cash flow hurdles, when you maybe should pull back on paying your suppliers because you've got some big expense due. That's very, very vital. Cash flow management, ideally, you're all about taking all the excess cash that you've got in your business and not letting it sit there idly in your bank account, but rather making sure that it's working hard for either your business or it's given to the shareholders so that they can start building their wealth when they need it too. So cash flow management needs to have a very holistic picture of the business, its needs in now and into the medium and long term as well. Tax liability management, oh my gosh, nobody can shut your business down like the tax office. Quicker, easier, and absolutely fatal. If you don't pay them what they need when they need it, then you're in big trouble, and someone needs to manage that process. Now, quite likely, as I mentioned earlier, you've outsourced your taxation work, and that's all just absolutely fine. But you need to make sure that your internal tax liabilities, that is, if you're preparing them on the BASs, but also the actual payment of those liabilities is all recorded and ready to go and well managed. So, and your internal management accounting services can help that. So what really happens now if you're not outsourcing? So typically your bookkeeping might be done internally by your spouse, and I'm not going to be sexist and say it's your wife at the kitchen table. Could well be your husband if you're working for business as well, or it could be a receptionist, could be an administrative assistant. They're doing the kind of accounting work within the firm. They're not qualified accountants, but they know enough to how to run the accounting system that they can do that sort of work. And your internal management accounting work is either outsourced to your accountant. That's right, outsourced to your accountant. So you call up Joe, your accountant. Joe, how you going? Look, I'm thinking about buying a new machine. Can you tell me whether I should do that? Joe, how did I go last month? Or Joe, the bank needs some numbers for the quarter because I'm thinking about increasing my loan. Can you help me out with that? So it's either outsourced to your accountant or more likely it's simply not done. So you know what, if the bank didn't need that quarterly report or the monthly report, I'm not getting it. I don't even know what a key performance indicator is. And I know no one's really doing all that sort of work for me at all. So here's a question. This is our little trial of what's going on. Why do anything is the first point. So, okay, why do anything? Well, activity statements. Now, activity statements came in the year 2000 in Australia, and I apologise for those people overseas, but they required us to tell the tax office how we were travelling, at least on a quarterly basis. And because of that, it meant that we had to keep our accounting records. It was a good by-function of that new tax law that came in. That meant that we had to keep our records up to date, at least on a quarterly basis. Now, before that, people often, never used to know what was going on for a whole year. Can you believe running a business, more likely outsourcing your own job, but running a business and not knowing whether you were making any profit for a whole year, and sometimes 18 months or longer, because that's how long it took the accountant to do your accounts. With activity statements, it's monthly or quarterly. So we now need some sort of internal accounting, or we could take that out. Bank reporting. If you've been lucky enough to borrow money from the bank, like we have, then the bank will require reporting. Now, sometimes it's every 6 months, sometimes it's every quarter, sometimes it's every month. You know what, depends on how good you are at paying them back and how nervous they're getting at any particular point in time, and also their policies as well. But bank reporting is necessary, so they might say, hey, can you guys tell us how you're traveling? Cash flow analysis. So often we'll have clients of our accounting business come up to us and say, I don't understand, where's all the money going? We seem to be making plenty of money, and yet I don't see it in my bank account. Where is it? This is a very common query or complaint from business owners. They just don't know where their cash is. So cash flow analysis is really important. Inventory control, what's that? Oh my God. One of the areas where the cash disappears to is buying too much stock because the stock doesn't turn over regularly enough for lots of different reasons. But inventory control is vital for that. Invoicing and collection. We've been in this very sad situation where clients have not got this right, and it just means that their customers aren't paying them when they're supposed to be paying them. And if you're not asking, they're obviously not giving. Or the other side of things is they're not actually invoicing either regularly enough or sometimes at all. And it's like, where did all the money go? Well, you know what? You didn't. I thought I made more sales than that. Yes, but you didn't record them. You didn't actually go and physically put the invoice in the system. So you never got paid. And payments to suppliers. Oh my goodness. I think all business owners have been in a situation where they've got confusing statements from suppliers, and they might have accidentally double paid an invoice, or they might have accidentally not paid an invoice. And of course, you're on the suppliers are on the phone at the worst possible moment saying, can we please have our money? Now, it's very difficult if you say, well, I don't actually have it. So even if you're an accountant and or a financial controller, can you get enough accounting? Oh my God, we're talking about accounting during our lunchtime. Can we get enough accounting? Of course we can't. No, the answer to that is got to be, what we're really getting at here is to say, even if it's like a plumber trying to fix their own taps at home, even if you are doing that, can you get enough people around you giving you information that helps you run your business? So can you get enough information? Can you get enough accounting information? Well, probably not. You can always get more. Okay, so here we go. Typically, no. Nice little line there. Okay, so if you're an accountant and financial controller and you're listening to this webinar, and I welcome you along to this webinar, of course you've got the skills to do all of the things that I've explained. This has been boring for you so far because you understand all of that. But have you got the time to really add value to the organisation the way the organisation needs? So you know better than anyone that project work is all-consuming. If I'm thinking about moving offices or my factory or moving states or buying a business, that is all-consuming. There's so much work to do. Business structures, asset purchases, things the business needs help with will take you away from your day-to-day tasks. But do they still need to be done? So what usually ends up happening? Well, you're working weekends. Oh, really? Great. Oh, I've got to work overtime to make sure that the payroll gets done so that my people can get paid on time. So, yeah, probably not. So if you've got limited information, that means that your business owners are going to get frustrated. So if you're taking too long to deliver the answers on a project as to whether they should buy a business or not, I guarantee your business owner is going to get very, very grumpy. Even if, but boss, everyone got paid on time. Well, that's great, but I also need the information on buying this new business. The business owner will then end up undervaluing your internal accounting role. So you're the financial controller. You're supposed to organize all this. You're supposed to tell me whether I can buy this business or not. You're supposed to give me the information when I need, in the format that I need it. And you're supposed to do everything else as well. So it just means that if you don't do that, the business owner is going to end up undervaluing your role. And no one likes that. So what should you do? What are your choices? If you agree that you can't get enough accounting and that you probably need some more support, you can either insource it or you can outsource it. So what are your options? All right. Let's talk about insourcing. You know, we talked about the definition of outsourcing before, but what the definition of insourcing is where I do get my secretary or my PA to go and get me a coffee. Now, since she's based in the Philippines, that might be really hard. But we do have admin people here in our Melbourne office, so I could get one of them to get me a cup of tea, and indeed I do that if I'm with clients, and that's called insourcing. Okay, insourcing for accounting side, and what we're talking about is hiring a full-time or part-time accountant, bookkeeper, or administration assistant that can do that sort of work for you. So they're going to work for you in your company. Now, the pros of that are it's easier to control the process. You can see someone, you can see if they're sitting there with their feet up on the table or playing games or looking at Facebook all day. So you can control the process that you've got. You can ensure compliance to the company values and policies. So if you outsource the process, like, so for example, our cleaners, I've outsourced to our cleaners, but I don't know if they have a gender equality policy in place. I only assume they do. I don't know whether they treat their employees kindly and with respect. these are the sort of values that are important to us as a company. So if we've got our own cleaner, if we've hired a cleaner, then we can make sure that they will comply with the company values and policies. What's against that? Of course, headcount restrictions. Oh my gosh, every financial controller or accountant knows what headcount restrictions are. In fact, everyone who works for anyone knows what a headcount restrictions are. And that's when the bosses are sitting there, or the shareholders, the managing director sitting there and going, you know what? Our labour bill is too high for the sort of to meet our budget. And in order to meet our budget, we need to put a freeze on headcount. So we can't hire anyone else. We're just going to have to do more with less. And that means if people leave, we don't replace them. And that's tough, especially if you haven't arranged the processes or really planned that out. And let's face it, everyone, bosses aren't really great at working out how the work's going to get done. They just say, hey, can you do it with less heads? Now, it also might be more expensive. Now, I say maybe more expensive. There are minimum wages here in developed countries. So like in Australia, where we are right now, New Zealand, the US, these are countries that have rather expensive accounting resources at their call, because we've got a lot of reasons why that is. And then there's low-cost labour environments, and those low-cost labour environments are typically less expensive than the high-cost labour environments that we exist in, or our businesses may exist in. And you might have to induct people, supervise them and control them. So that might actually be more time for you, because, okay, so I've hired Joe Blow. Joe's going to do my bookkeeping now. I've got to teach Joe how to do the bookkeeping. I've got to teach them how I like things coded. I've got to do all of that sort of stuff. And I've got to make sure Joe comes in. And if Joe's sick, I've got to organise his sick leave. I've got to organise a replacement. If he can't do the payroll on time, who's going to do the payroll? So all of that might actually end up taking you more time, at least initially, than outsourcing. So that's the con. So outsourcing, again, we've talked about outsourcing, and this is what we're talking about in particular regard to this webinar, is to hire a full-time or part-time accountant, bookkeeper, administration assistant from an outsourcing company, or just hire someone who is going to give that work to you anyway. Okay, the pros. It can be more cost-effective. Now, if I've hired Deloitte, that is a large, everyone knows who Deloitte is, or KPMG, one of the big boys, to do my internal accounting, my payroll, it's probably not going to be more cost-effective. They're probably going to charge me a lot of money to do that. So it's not necessarily more cost-effective than doing it internally, but it can be if I'm using a low-cost labour environment like the Philippines or Vietnam or something like that. You can get around the headcount restrictions, and the bosses say you cannot hire anyone else. I'm sorry, that's cool, but they might let you, go under the radar with a little bit of a contract to do, say, a due diligence analysis for a business that you're looking at buying, or maybe you could even outsource your payroll, that sort of thing. Now, you don't necessarily need to worry about their taxes and super. Now, sometimes you do. It can be complicated in the law, but often it's just, you know what, I'm hiring to get a service, and that service provider will worry about all of the payroll taxes and superannuation and work cover requirements that I need. So I don't necessarily need to worry about those sort of things. And they can still be inducted to the business depending upon the sort of model that you're using. So if you're using a large company, then it might be difficult because they've got their own values and rules about working in the business. But they can still be inducted to the business if you're using a smaller player as well. Cons. It can be harder to control, absolutely. So these people are not necessarily working for you full-time. They might be working for you just part-time. So if you think of typically a bookkeeper that you get who comes to your offices for 2 hours every month, whether they come on a Tuesday or a Wednesday might be difficult for you to control them. Whether they wear flat-soled shoes or high heels might be difficult to control. So they can be harder to control. They can often out of sight, out of mind. Now, I met with a client this morning that this was exactly the case. So they've got a full-time person sitting in the low-cost labour environment of the Philippines, one part of my global team, and they recognised that because that person was out of sight and out of mind, they weren't utilising them as much as they possibly could. So that's a real problem with outsourcing. You can't actually see the person that's sitting there and playing Facebook or sitting with their feet on the desk and having a bit of a snooze. And you need to think more about your processes. So you can't just sort of let it happen. I'll just throw people at the problem and they'll figure it all out. You actually have to think a little bit harder and work out what's going to be the most efficient thing for your business, which I think business owners would agree is not a bad thing anyway. And especially if we're talking about accountants love the whole sorts of efficiencies, maximising our processes and making sure that we keep our controls in place in order to ensure that the business achieves its objectives. Great. So, outsourcing. No matter what the outsourcing model is, if you decide that you want more time and information via outsourcing, then outsourcing will be for you. So we're going to talk for the rest of the webinar exactly about outsourcing. So you know what the insourcing model is. This is outsourcing, what the different options are, and what the 12 things you must do are. Okay. Number 2. You've got to categorize. So we're jumping straight into your 12 things. I apologize for that. And you'll notice that number 1 was missing. And the reason for that is going to be becoming apparent at the end of the webinar. So number 2, you've got to categorize all of your jobs. Now, what does that mean? All right. Next to each job you've listed, so what am I actually doing on the accounting side? You know, I've explained all those accounting functions. So write them all down. Get your team to write them all down if you've got a team. But write them all down. And next to each job that you've listed, indicate whether it's a daily, weekly, monthly, quarterly, annually, or biannually job. Okay, so if it's an annual tax return or annual audit work, then obviously that will just be done annually. Some things are done biannually. Maybe it's a budget setting process. Quarterly might be management accounts or board reporting. Monthly it might be management reporting. Weekly, daily, it might be just sort of cash reporting. But put next to all of those jobs when they're being done. Number 3. It's really important to describe the outcome of each job. Why? Because we end up as humans doing things that don't need to be done just because they were done that way in the past. So really want you to think about what it is that you're trying to get from doing that task. So even if you don't 100% understand it, write down what the outcome of each job is so that you'll know what success looks like. So for example, if I asked all of you, and I know the accountants on this, so don't put up your hands if you're an accountant, but I ask you to say, what does the output of what are we trying to achieve with a bank reconciliation? What does success look like with a bank reconciliation? Does anyone know what that would be? So you don't necessarily know how to, don't need to understand how a bank reconciliation is actually done. You just need to know what success looks like. And Jeremy's correct. Jeremy says, well, all of that is that the you know what success is because the general ledger will match the bank statement plus or minus timing differences, and that's absolutely correct, Jeremy. Well done. So even if you don't 100% understand, you know, how to do that, you should know what success looks like. Now that forces you to consider how important the job was in the first place, and this is just typical business analysis. And we used to do this a lot with IT systems, but somehow it seems to have fallen across the way, especially for small or medium-sized business. But if you didn't need, even if you're thinking, well, success is just that the job gets done, I'm like, well, yeah, but how's it going to add value? Maybe we don't need to do that job, so you can just cross it off the list. Oh, cool. Makes sense. Okay, number 4 is to decide what to outsource. So once you've got your full list of jobs, work out which ones you want to keep in-house and which ones you want to outsource. Now, that might be, you know, things might be particularly sensitive, so you want to make sure that you get your payroll done by your payroll team because they've been doing it forever and you really don't feel comfortable outsourcing that. But other things like bank recs or your management reporting can absolutely be done more effectively outside than inside. So write down the reasons, because you might get more confident in your outsourced account. And what I mean by that is often people start with this sort of outsourcing of your accounting function with the thoughts that the person's just going to do very low-level administrative work. So things that no one else can be bothered doing. But if you just write it down saying, oh, I think we're going to keep the process of doing payrolls, this is my example, in-house because we think that it's beyond the capabilities of my outsourced accountant, then when you come back 6 months, 3 months later, and you look at the reasons, go, wow, you know, my outsourced accountant has really, really impressed me, and I'm sure they could do payroll. And the only reason we weren't outsourcing payroll is that we didn't think that they were capable of it. So now that we've got that confidence, we will outsource that process. And that's really important to do because one of these points is going to be to circle back and have a look at what you're outsourcing, what you're not. What happens otherwise is that a year goes by, 2 years go by, and you just become less efficient using the outsourcing function. And I'll explain that a little bit more in a little bit more detail as well. Number 5, work out how long each job should take. Now, just make a realistic assessment of how long it should take. Guess if you have to, if you're not quite sure, you can get an idea of how much time your accountant can take on it. So if you think, well, to do a bank reconciliation in today's day and age should take 10 minutes, and that's quite reasonable in a lot of cases, not the sort of 2, 3 days, 4 days, or a full-time job at the tobacco company back in the early 90s for 4 people. It needs to be, you need to be realistic about how long it'll take. If you said it's going to take 10 minutes, then, have that idea in mind. So if your outsourced accountant comes back and says it took an hour, then you might think, well, an hour once while you're learning is fine. If it's still taking an hour a week or 2 down the track, then there's a problem. You need to address that. Communication channels are so vital. So how exactly are you going to transfer the documents that you need to do each task? So if you've got an outsourced person, that is someone who's not coming to your offices and doing anything, you've got to get your invoices, you've got to get orders, whatever it is that you're getting, you've got to get it to them. So you need to work out what that communication channel is going to be. Now, there's so many options for that. I don't recommend email because I think that can be fraught with dangers. There's so many other places, whether it's Dropbox or Google Drives or Receipt Bank, other things that you can use to transfer documents for that task. How are you going to add tasks? How are you going to say to your accountant, you know what, I think you're doing a great job. I think I'd like you to do the payroll now. So how are you going to do that? How are you going to tell them how to do that? So some sort of project management type of software is very useful in that case as well. So you've got to think about how will you add tasks? Okay, how will you know when tasks have been completed? So, do you need, these are control mechanisms. So I need to make sure that my accounts payable invoices have been entered into my system so that I can, and my suppliers have been reconciled. So I know exactly how my cash flow is looking. How do you know when they've done that? So again, you need some sort of project management software where the person can say, yes, I've done this now. So you can go back in and check and make sure that they have done it. Because humans are humans, and sometimes they get lazy, or you might think that they've done something when they haven't really, because they've got some other something else that they've forgotten to tell you about. Okay, the accounting system that you're going to use, as I say here, this is not the most important thing. But you'll need to know how the outsourced accountant will access your system. So I'm saying it's not the most important thing. Cloud accounting has by no small feat, cloud accounting has allowed outsourcing to be an absolute reality. So, products like Xero, NetSuite, J-Curve, those sort of things, they're on the cloud, and they allow someone, no matter where they are in the world, to log into your system because you're not hosting them on a server here. But it's not the most important thing, because we have plenty of clients that allow their bookkeepers or their internal accountants to access their systems via a virtual private network. So you just need to work it out with your IT people. Sometimes that just means having a quick chat to them, or otherwise it might just mean giving them access to your cloud-based system. So cloud-based is easy. VPNs, that's networks. If you've got a server for your accounting system in your own business, you'll need your IT help. And remember security, guys. It's really, really important to remember your security, and I'll explain some of the options in later webinars for the differences between outsourcing to a person who's sitting at their home compared to a person who's sitting in a proper office like Go Globals. All right, so number 8, selection of your accountant or team. Now, once you've got all your jobs, their outcomes, anticipated times, your communication systems, you've worked out how to give them access to other systems, you are ready to hire. Yay! I'm ready. Bring it on. I want this to happen straight away. Now, these are your different options. You can have a sole trader business. So that's a bookkeeper or a virtual CFO. And they might come and see you once a month, once a quarter, once a week, 2 days a week, whatever it is. And that's just a person who will go around and they will get a number of different businesses on their books, and that will feed them enough. Your external accountant. You can absolutely go to Deloitte or go to Joe, my accountant in my example before, and say, hey, can you help me out with doing some things? And I'm sure your external accountant will rub their hands together and say, absolutely, I can do that for $180 an hour. Sure, why wouldn't I? Upwork's interesting. So usually someone in a low-cost labour environment will say, hey, you know what? I apologise, I was going to go to a Spanish accent there, but that would be rude. So usually people in a low-cost labour environment overseas, if you're in Australia, or it might be in a different state if you're in Europe or in the US as well, Might not be overseas, might be south of the border, but usually they're overseas for us in Australia, and they're people working from home, typically, and there's some pros and cons of that. You can use a process outsourcer. These are also called seat leases, where you say, okay, I want payroll done. I don't care who does it. Just do my payroll for me on a monthly basis or a weekly basis. And I go, yep, no worries. Just tell us what the processes are, and we'll make sure that gets done. And that's called a seat leaser. Well, the other option is, and generally, again, in a low-cost labour environment, is called a staff leaser. And that's where you get, Joe. Joe was my accountant at home. Hernandez. And Hernandez is a fully qualified accountant, and he works for a staff leaser who pays him and pays all his taxes and superannuation, all that sort of stuff. So you don't have to worry about that. But he works solely for you, or he only works 2 hours a month for you, or whatever he works. He works on a staff leasing basis. So you're just leasing the staff, you're not actually owning them. Now, number 9 is the induction process. Now, as per an internal employee, be ready to advise on company culture, the do's and don'ts, even if they're part-time, even if they're just seeing you once a month. Give them a feel for your business. Why? Because it's quicker productivity. If they can picture in their mind's eye exactly what your business is like, I mean, give them a video tour of your business. I absolutely recommend that. But give them a view so that when they're sitting at their desk, they feel part of your team, even if it's not full time, even if it's only 2 hours a month. At least they'll get some sort of feel for your business. Your do's and don'ts are really important. So it's really important that we don't contact this customer, but that we do contact this customer. It's really important that you give them your company's culture. So it's really important that they don't be disrespectful to other team members. It's really important that they don't be sexist in any way. It's really important that they don't drink on the job, all that sort of thing. If that's part of your company's culture, then for that time that they're working for you, make sure that that's part of their rules as well. Logins and access are established and tested. So there's no point telling someone to do something if they come in and they can't get access to it. Now, often in low-cost labour environments where English, if the English is your predominant language, and since you're listening to this webinar in English, it probably is. If English is your predominant language, low-cost labour environments, often English isn't their first language, and sometimes they're a little less confident, so they won't always tell you if they can't get access to things that they need. So you need to make sure that they do have that access, that they're established and tested as well. And then if it's going to be part of a VPN, that you've tested security as well, you must get your IT people involved, especially in this day and age. Make sure that you're protected from any frauds or anything else like that. So you need to advise your team member how you'll be keeping track and managing them. Now, there's heaps of software tools. Sometimes people are into that sort of thing. Sometimes they aren't. There's a software tool that will take a photo of the person, or using the webcam every 30 seconds or so you'll see that they're still sitting there with their computer. There's other programs that'll take a screenshot every minute or so you'll see what they're working on as a 2-minute movie. At the end of the day, you can see all of the things that they did and where they went, and if they went to Facebook, that's not good. Some people have got cameras in their offices, and they can see in their low-cost labour environment, they can just log onto the camera and see whether Hernandez is sitting at his desk doing what he's supposed to be doing, or he's really chatting up Conchita in the corner. But you need to tell them. You don't put secretly cameras in there or secretly put software on their computer. Tell them how you're going to be managing them. And that's only what we do here in Australia or in your current business. Make sure if you're doing outsources that you tell them how you're going to be tracking and managing them. Make them feel part of the team. It's quicker and easier than an internal member, but it's still really vital. So if you make them feel part of the team, your productivity will rise. We know this from our own experiences. Number 10, job allocation. Okay, list out the jobs you want your outsourced accountant to do and advise them whether you want them to do on a weekly, monthly, quarterly, or annually basis. So okay, Hernandez, in my example, this is what I want you to do every day. This is what I want you to do every week. This is what I'm going to do every month, quarter, and this is what I want you to do once a year. Make sure that you've got all that listed out. Preferably use a project management software tool. But even if you do it in an email, that's better than not having that there, because you just cannot assume when you're doing outsourced accounting that the other person understands what your needs are, understands what the business's needs are, and will act on that accordingly. Let's not make those assumptions, because you're setting yourself up to fail. Define what your successful outcome for each and every job you do, and make sure that they're aware of what success looks like. So we already know what we've defined that in previous steps. We know what success looks like. If I've entered all of these things, if I've done a bank reconciliation, if I've reconciled my inventory, I know what that looks like. Make sure Hernandez knows what that looks like. So don't just sit there and go, hey, mate, you didn't do the bank rec according to the way I wanted it done. And they're like, well, I did it, but you didn't get the success according to what I thought success was. So make sure that you communicate what that success looks like. Training. Wow, how important is this? If you use a system like Xero or Mild, the accountant will only need to know your way of doing things if you have one. Nearly every accountant and bookkeeper now in the world knows how to use Xero or Mild. If they don't know how to use Xero or Mild, they can get online and do the training. It's free, it's easy, they can do it, it's not a problem. So they only need to know your way of doing things. If you're outsourcing your accounting, you're teaching someone how to use a system that's very popular like Xero or Mild, I could have used QuickBooks as well, then run to another accountant because clearly they have no interest in keeping their craft up to date. So anything bigger in terms of a system like NetSuite, even J-Curve, which is just a smaller version of NetSuite, or Great Plains, or larger SAP or BPIC systems, they'll require you or someone who knows the system to train the outsourced accountant. I think it's unreasonable to expect someone in a low-cost labour environment to be up and trained on every single accounting system that there is in the world, PeopleSoft, whatever it is. So if it's bigger and proprietary, just like anyone else that you're going to bring into your business on an internal basis, you'll need to train them as well. And bear in mind, if you train them, that's going to be IP in their minds as well. So you need to make sure that you train them in the most efficient and effective way possible. So make sure when you do that, the training's either recorded in a video or at least written down. Why? Because if the accountant doesn't work out, you don't want to keep doing that. You know, hopefully you've got an organisation like Go Global where we can pass that information on to the next team member and make sure that they train if your old team member isn't working out or does leave. I mean, we don't have slavery. People are free to come and go as they please. So make sure that you're not wasting your time and continually repeating the same sort of training over and over and over. So make sure it gets recorded. I'm recording this webinar, so I don't have to go through this again. I'm just going to play this webinar. And next time someone says, hey, what are the 12 magic steps to outsourcing your accounting? I say, hey, have a look at my webinar. So it's really important to record it. And it's so easy. There's so many tools now to record things, or at least write them down, instructions, so that they can refer back to them as well. Review. Number 12. We're at number 12. That's the last one. Even though they were now up and running, it's important to regularly circle back, work out what's working well and what isn't working well. Now, I want you to understand your own time frames here. So there's a bit of a learning curve, a little bit of a J-curve, and if I was a bit more confident at using the whiteboard on this system, I would. But I'm not, so I won't. My fault. I'll do that on the next webinar, I promise. If you've got a learning curve, and it might be 1 week or it might be 6 months, but you give that a reasonable amount of time to get through that, that learning curve up and running, and then do a full review. As soon as you think, yep, this is now working really well, I've got all my tasks over there, they're doing them in the time that they need, they're trained up, do a review right then and there. Circle back and come back and have a look at your list of tasks. Are your things still reasonable? Are your assumptions still reasonable? Or are you getting better value than you thought, so you could add tasks to it? Or, it's important to really, as soon as you pass through that learning curve stage, to do a review, and then schedule to do another review every quarter or every 6 months or at least once a year, please, because we're in a very fast moving world. We need to make sure that we can keep up with times, and things change in business all the time, but processes are a bit slower. They're not quite aware of exactly what's happening. Legislation changes or customer changes, the way we do business, a new product or service gets added. Sometimes our old processes are still being used and they aren't applicable anymore. So make sure that you regularly check your business. It's not just in outsourcing, it's a good thing to do anyway. So it's very tempting to set and forget, especially because they might not be in your office. They might be sitting in some low labor cost country like the Philippines. And it's easy to set and forget, because then you don't have to worry about, okay, I don't have to worry about Hernandez, he's just doing his thing. But you'll do yourself and your outsourced accountant a disservice if you don't keep reviewing what they're doing and how they're doing it and working out more efficient ways of doing things. So really resist that temptation. And weekly or at least monthly, review on success factors. So Skype or Zoom meeting for 15 minutes will massively increase effectiveness. Believe me, most people who outsource their accounting function or even admin functions or even technical, medical or engineering functions don't communicate with their outsourced people effectively. They don't do a Skype or face-to-face Zoom meeting. They just use emails every now and then, once every few days. So if you're doing it, you're going to be massively advantaged in terms of the productivity, the loyalty that that person will give you. And that might just mean just that simple 10, 15 minutes of face-to-face time might mean that that person rejects another job offer, which saves you considerably retraining time and saves you productivity, all that sort of stuff. So really encourage you to, for at least a weekly or at least monthly, on the success factors that you've set, just have a quick face-to-face chat meeting and let them know how they're going. These aren't machines, these are people, and they, people need to know that they're adding value, that they're appreciated, that they belong, and all of that will help them do that. And don't forget to add tasks as you evolve and grow. I mean, you added a new product or a service. If you've got other tasks, and the accountant can do it, add that task. I mean, I'm sure they're not going to be at 100% capacity, at least for the first few months. And if they are, then get another account, keep adding them. Don't just sit and forget and say, wow, we've done a great job. There could be many more things that your outsourced accounting team can do for you that will help grow the business. All right. So this is me, and I'll come back to the live me for. So remember, there's always a steep learning curve. Always. Doesn't matter who you are, how big your company, how experienced you are. There's always a steep learning curve, but the advantages can be massive. So it's worth persisting. This is what I always say. That's why my pitch is there. So steep learning curve, but massive advantages. It's well worth getting through that pain because the gain will be absolutely worth it in every way, shape, or form. Alrighty. So that's it for the presentation. I will now turn on